Hello everyone, welcome to 1011's channel. In this video, we're going to look at 6 stocks for positional trading, which are looking really fantastic. And the stop loss is just around 10%, except for one stock, and they all look good for at least a good 3 times the risk, which means a good 30% or 3 times the risk that we are looking for these 6 stocks that we're going to discuss today. But before that, I want to first discuss the Nifty Outlook as usual, just to give you a perspective as to where the market is and what are the potential targets that we're going to see probably in Nifty plus, and then we'll take a look at the other stocks as well. So let's take a look at Nifty first and then the 6 stocks. Don't forget to watch till the end of the video because these 6 stocks are fantastic. So starting with Nifty, if you see Nifty here actually has been looking quite good, especially in weekly charts. So always, if you want to get a long-term perspective, start with the weekly charts or monthly charts, as I always say, because that's what gives the real perspective and the real trend. Now, we have been in a strong downtrend, but we also formed a doji right at that trend line resistance there that we have been discussing the last few weeks. But then we've not seen a strong red candle or a strong selling that we've been seeing in the Western markets, especially DAX and Dow Jones or S&P Index and Nasdaq, where they have been falling really hard. Whereas the Indian markets have been gapping down every time last week, but then we've again risen and then we've gone higher again. Now, which meant that we did not really have a strong red candle just like the DAX or the Dow Jones. So that shows that there is definitely a strong relative strength in the Indian markets, especially Nifty is holding on to really well. And even the broader markets are doing fantastically well. Many stocks are going up, and that's why we're discussing also positional stocks today, which look really good. Now, taking a look in the daily charts in Nifty, just to give you a very short-term perspective, this is a major trendline support that you can see over here. Right now, this trendline support, I'm expecting this to not break, and probably going to break out of this. Probably next couple of days, we might have some volatility, but eventually we're going to break out and head higher. And for this, the stop loss is going to be this trendline support over here. Unless we don't break that, I see some really good targets for Nifty. Probably a good rally towards all-time high before some consolidation, and then we move eventually higher as well. Okay, so this trend line support on this horizontal line is the major support zone to look out for, and if in case you get a drop to those levels, probably a good chance to observe those levels and probably buy stocks as well. So that's my Nifty outlook. Do let me know. A lot of people have been bearish in the last few weeks, looking at how the Western markets are behaving. But I am still bullish in terms of Indian markets, though I'm still bearish on the Western markets. So yes, obviously if the Western markets go down, Indian markets also will correct, but I don't see a strong correction just like how it's happening in the Western markets. So outperformance would be there from the Indian markets. Okay, so now let's move into the 6 stocks today. I'm sure excited for that. And all these six stocks have really small stop losses. So first stock that we're going to take a look at today is Coffee Day. So Coffee Day actually had a fantastic setup sometime back around the zone where we had a strong breakout with amazing number of volumes. If you see, that's excellent volumes. We had an inverted head and shoulders breakout there, and then 4 weeks of consolidation. I'm on the weekly charts, and then we had amazing move, and now we have corrected all the way down, and we are retesting that breakout zone over here. Now, what's happened in the last 3 months is that this stock has not gone down in spite of some strong correction across a few other stocks. This stock has been holding up, and a lot of stocks have moved up, but this stock has been consolidating very tightly. So there is chance that the stock might head down as well, but my bias is that the stock might head higher, right? So 3 months consolidation, we are seeing some nice volumes coming. Whenever there's a green candle, we are seeing some nice volumes, and the wicks around the support zone also indicate that this stock is actually looking good. And in the last 4 weeks, we've formed a very tight range. We had a strong 2 weeks of green candles, and we are forming a tight range. Now, that's the weekly chart view. Let's take a look at the daily charts to find our stop loss and entry. So this is how the daily charts look. So we are having this nice base setup forming. We see the massive green candles with volumes, and we have been going sideways since the last 4 weeks, as I mentioned, right? So for me, this line over here is a very, very strong resistance zone. Moment we take out that zone, we're going to see some amazing targets in the stock. So let's take a look at that as well. But on Friday, we did have a very strong close with very strong volumes. Not a very strong close, but definitely good on the volumes. But on the weekly charts, we did see a good candle. Okay, so keeping that in mind. So I'm going to buy the stock at the current market price at 50.85. I'm going to keep a stop loss of 47. Right, so 50.85 stop loss of 47, which is around 7.5% stop loss. That's a pretty tight stop loss. So you have to be really, you have to have the guts to go forward with the stop. Remember, small stop losses give you a big position, so which means you can take some big positions and make big gains as well, right? So for a target of 62, I'm looking at 3 times the risk that we're taking. So around 22% return with 7.5% risk. And here, the next target is eventually 86. So if you're a swing trader, I'd recommend you book around 62. But if you're a position trader, then go ahead with 86 as well as a stop loss as your target. And here you're looking at a 9-hour trade, which is a fantastic trade from a position trading perspective. As usual, keep your position size to 5%, and that's for all the stocks. And I'll not mention it again. Also, ride the trend for maximum gains. So that's the first stock. But before we get into the next stock, this the Friday evening, I posted a video on how I use my breakouts kind of on CCI. A lot of people have viewed. It's been one of my best performing videos. So in case you want to learn more, there's also this playlist called Learn with an Investor playlist. Definitely do watch that. There'll be amazing learning for you, especially if you're a beginner. Go through that and also go through my pinned tweet on Twitter. There are a lot of reading materials, around 20 threads. I have it pinned in my Excel sheet that I have on the pinned tweet. Do check them out as well. Okay, so now moving on to the second stock for today, I'm going to look at a stock from the infra space or reality space, which is Brigade Enterprises, right? So Brigade Enterprises has been trading in a fantastic long-term channel since that bottom in May 2021. And we have this beautiful setup. And since the last 10 months, the stock has been going sideways, right? Now, if you see, this sideways movement has been just a rectangle consolidation. There's not been much selling. And I feel that the stock is now eventually ready. Volumes also, if you see, we're seeing some slight pickup in volumes after the downside in volumes. We're again seeing a slight increase in volumes. Last 3 weeks, it has been inside bars. Yeah, it has been pretty good. And this channel also is very good because here we see we're taking support around that channel over here, right? So that's the top line and that's the middle line. So that's the weekly chart, and it looks really fantastic after this massive move, a good 1-year consolidation, and now we're going to break out probably. So taking a look at the daily charts here, as I said before, we are seeing some amazing consolidation here in the last couple of 4 weeks. And here we are seeing slight increase in volumes. We did have some gap downs over here, but we eventually recovered. And this is also clean trend line support, right? And there's a clean resistance as well there. So once we take out this zone here, which is that red candle top, then we're probably going to head higher from here, right? So what we're going to do is we're going to buy the stock at current market price of 522 levels. We're going to keep a stop loss of around 477, right? The stop loss is around 8.6%. As I said, most of the stocks we're going to discuss today are around 10% stop loss, and that's around 45 points stop loss. And we're going to look at targets of at least 700 and also 900. So a target of 700 brings to around 4 times the risk we are taking, which is around 34% target. And with 900, we're looking at around 8 times the risk that we're taking, and the target is around 72%. Now, remember, the second target is for positional traders, not really for swing traders. Swing traders, you need to get out once you have 20-30% returns. Positional traders, you need to probably ride the trend so that you can milk the most possible out of any stock that you're looking at. Okay, so that's the second stock for today. Do let me know what you think about these two stocks. And now let's move on to the third stock, which is Bodil Chemicals. Now, the chemical space itself has been consolidating for quite some time. I think for the last 1 year or so, a lot of stocks related to the chemical space, dye intermediate space has been correcting, and they have corrected decently, and they have retested also some important zones. Now, in this case, Bodil Chemical, if you see here, I'm looking at the monthly chart here, and the stock has actually retested completely after the inverted head and shoulders breakout, and it is retesting and it is taking support around that trend line or channel support. Now, this is a beautiful long-term channel, and long-term channels are an excellent way to enter stocks here, right? And the price is also available at 2016 levels. So since 2016, 6 years, the stock has not done really well, whereas the fundamentals have kind of improved except for the margins, because of which the stock's price has actually come down. Taking a look at the daily charts to give you an entry, daily chart also here, there's a beautiful channel, downtrend channel, but I feel we're coming to an end of this, given that we're having this spike and we're seeing this tight consolidation here. Now, this is an inverted head and shoulders, a clean inverted head and shoulders pattern. And once we break above that 99 levels or 100 levels, we're going to see an excellent move towards higher levels here. So we need to buy the stock at current market price, which is around 96, 97 levels. We're going to get a stop loss of 86 at 86, or which is around 10%, just like the other two stocks. And we're going to look at targets of 125 for a swing trading perspective and 150 from a position trading perspective, which comes to a 30% for the first target, around 56% for the second target. Now, remember, you need to always look at trading from a risk reward perspective. So here the risk is around risk reward is around 3 times the risk, and with 150 target, it is around 5 times the risk that we're taking. So that's the third stock. The fourth stock we're going to look at today is Swan Energy. Again, an excellent stock which gave an excellent move, but has corrected, retraced all the way down. And from the top, it has retraced from 340 levels all the way down to 200 levels. And again, but remember, the swing high, swing low is still, the previous swing low is still not taken out, right? Now that's the previous swing low which I'm talking about. So we had a massive move there, but we've not taken out the previous swing low yet, which means the higher high is still intact. And for me, this is an excellent pick from today's set of stocks. So what we're going to do is, we're also seeing volumes here right at this point on Thursday and Friday. So what we're going to do is buy the stock at current market price of 223 levels. We're going to keep a very tight stop loss of 11%. Now remember, this is a very volatile stock, so you can get really quick moves. 20%, 30% moves can come in a matter of days. So you need to be really careful if you're trading from a swing trading perspective to book those gains. Otherwise, the stock might again correct and come down. From a positional trading perspective, don't have to worry. Ride the trend and see how much you can make out of it. So here the target is around 300 from a swing trading and 430 from a positional trading perspective. And we're looking at risk reward of 3 for a swing and risk reward of 8 times from a positional trading perspective, which is around 90% returns. So I'm looking for eventually for a target of around that 430, which is around the top of this channel, which might take a few weeks to probably a few months. So that's why positional trading, you need to have patience and ride the trend. The next stock we're going to look at today is from the textile space. Remember, I've been posting about Monte Carlo on Twitter for some time, but we also have this beautiful company. On long-term charts, this also could be a fantastic investment pick from the current market price levels. Okay, again, most of the stocks, if you see, I'm drawing channels because channels is what I love. And I look for reversals from channels and then a consolidation and then a breakout. So here, in this case, the stock had a fantastic move after the March. It went from 300 levels to almost 1000 levels. It was a 3x move, but it also corrected deep back to 480 levels, right? Now, then we had this doji there right at the channel support. And now we had a move up, a move down. And again, last week was a fantastic week for the stock. The stock was up around 15% last week, and volumes have been excellent. In fact, one of the highest volumes in the recent many weeks, many months, right? Taking a look at the daily charts, if you see, that's a beautiful cup and handle, or you could also call that inverted head and shoulders there. Whatever it is, the stock looks fantastic because of the volumes that we had in last Thursday and Friday. So here we've already had a breakout last week. So this was one of the stocks which have already broken out from this horizontal resistance. So we're going to buy the stock at current market price, which is around 663 or 665 levels, right? And what we're going to do is we're going to keep a stop loss around that swing low, which comes to around 560, which is around 15%. Now his stock has the highest risk amongst all the 6 stocks we're discussing today. And we're going to look at targets of 930 or 1200, which is 2.6 times the risk for a target of 930 and 5 times the risk for a target of 1200. For all these stocks, keep 5% if you're a beginner. But if you're with me and if you've learned how to trade, especially if you're with me on Twitter, you know how do I trade, how I pyramid. So do follow that and try to ride the trend as much as possible. There's also a trend following video which I did some time back. Do check that out of how I ride trends and how you should actually ride trends as well. So that's the 5th stock, and the last stock we're going to talk today from is from the automobile space. Now remember, I did cover a lot of stocks on the automobile on Twitter and YouTube before, and many are doing well. And today I want to look at TVS Sri Chakra, which is the last stock for today. And again, this is a fantastic stock because it is reversing from a long-term uptrend, long-term downtrend. 6 years the stock has not given any returns, and we are finally seeing some volumes coming in. We had a breakout. I've kind of retested that swing low of the weekly charts here, and we're kind of heading higher again. The volumes last week hasn't been great because it was an inside bar, so don't be worried much. But this is a beautiful long-term setup on the monthly charts, and I think the stock might break out next week on a week or two, and we might head higher. So on the daily charts, again, that was a breakout zone there. That was one of the points that you could have entered. But the next point is right now, right? We had this nice consolidation here for almost 1 month. We had this beautiful double, resistance here, and now we are breaking out on Friday with volumes. So for me, this stock again is a fantastic pick from the auto space. Buy a current market price of around 2300 levels. We're going to keep a stop loss of around 2030 levels, which is around 11%. Again, all these stocks are fantastic from a risk perspective, right? You don't lose much even if the stock hits your stop loss. And I'm going to keep a target of 2900, which is the previous. So on the weekly charts, if you see, this is the target over here. We're going to look at this line over here, right? And we're going to look at 2900 as a target. And I feel that it might come in the next few weeks if the markets do well. Okay, so these are the 6 stocks I want to discuss today. So if you did like my analysis on these stocks, if you did like how I analyze stocks, don't forget to subscribe to my channel and don't forget to like this video as well. So I'll leave you here. Take care, stay safe and trade safe until I see you in another video. Bye-bye.